The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 5th terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to call on in. You can do it right now, 877-927-6648. If you can't call in, you can always send me an email, steve@tfnn.com, and inside the Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 264 points at 21,723. S&P off 28. NASDAQ 100 down 1.5% or 93 points. Russell off 17 points. Semis down 23. New York Stock Exchange off 124. So 1% to about 2% in the semiconductor space, trading down at 1096. Now, the spot volatility index up 37% as we speak right now. That's after the close on Friday. That's up $3.76. You know what that means. I know what it means. The gold contract trading up $14 at $13.44. Leading the charge here to the upside is Madison Square Garden, up $15 or 7%. Insmed up 12%, up $12. That's 100%. Now that's a doozy out there. They certainly solved something. Intuitive Surgical up $12. Cat is Inc. up $3. The downside, it's Bitcoin down 7% or $56. The Bitcoin Investment Trust Priceline is off $23, a little over 1%. Amazon down nearly 1.75% or $17. Google off 15. So we can see that it is the NDX 100 that is, and the semis that are leading the charge here to the downside. But let's start by taking a look at one thing at a time. Let's really pick up where you and I left off on Friday when I filled in for Larry because I couldn't get to my show in time. And the one thing that you and I knew was this. We took a look at this chart out here. Now, this chart is showing us a weekly time frame. This chart, by the way, is the equity futures contracts. Weekly chart on the upper left, weekly chart on the upper right, daily chart on the lower left, and weekly chart on the lower right. It's the ES Mini that we're going to focus on first because when you and I – so on Friday, we saw that price was trading right into resistance levels for both the ES and the NQ, and that was really our focus on Friday. We knew that snipers – meaning sellers were hanging out right at those levels. Now, what we knew was that the real sniper attack was inside the ES Mini, so the S&P 500. Now, the reason that we knew that from a weekly perspective here, I'm just going to go ahead and turn price off again, just for any new listeners out here. See, we use a number of tools out here, and one of those sets of tools being these market profiles. So let's stay with those for the moment. The center line of that box, there's 3 lines in every box out here. Now, you don't see the right and left-hand side line, so to speak, but just picture, you can see where price starts, where everything is parallel to each other. And what you can see is that center of the box being closer to the top from a weekly standpoint out here. So this says that it is really buyers in control of this price area. This price area is 24.79 to 24.19. Now, all we have to do is just simply go ahead and utilize something that has been inbred into our minds, which is if you can't bust them down, you bust them up. what did the ES Mini do last week? The ES Mini tried to bust out to the downside. That was a 24.19 level. Where did price actually get to? The low last week was 24.21. Then it tried to bust them up, got up to where? 24.79. The actual top of the box, 24.79. So therefore, what is it that we think is going to be the outcome here in the ensuing days? Couldn't bust it up. Now price is going to try to bust it down. So the price area to be watching is 24.19. Now this just may be a consolidation, meaning a move sideways out here. It may mean something more than that. It will be the penetration or the move below, or close below, I should say, the 24.1950 area. That would be the signal for both you and I. So it's the ES Mini that we're certainly going to want to pay attention to. Now, inside of the NQ, price may only get down to about 58.21, because as we take a look at its profile box out here, when we turn off price, you'll see that this is actually a bullish structured profile on many different levels out here. Now, couldn't bust out the top, 59.95.75. Yes, intraday, it traded above that, but it is all about the close, in this case here, weekly close, and it's really all about the body of the candle. It failed to do so. Now price is likely going to pull back in the 58.21 level. That's the center of the box. It may be that pulls back to 57.34. I don't know, but 58.21 would be my target to be watching for. Now, this is looking at the weekly charts. There's going to be lots of intra-session swings out here, and so we'll pay attention to that. And with regard to those swings out here, we're going to go focus on what you noticed, which was, hey, Steve-O, you said the volatility index, spot volatility index, is simply traded up 38.5% as we speak right now. So what does that mean? Well, if we go over and take a look at our one-day rate of change chart out here, you are going to see that one-day rates of change greater than just 10%, you'll see a stall or a bounce or a bottom in price within, it used to be within 48 hours. Now it tends to be within 24 hours. Could be overnight, could be early in the morning, could be after the morning session tomorrow. But that is what you should anticipate. Now, why is that important? Well, if you are like Tom, who always is trading the VIX product out there, TVIX as a matter of fact, you're going to want to, at some point in time in the day, take those profits. I would suggest that you do that based upon this pattern out here. Now, of course, the TVIX is based upon the September and October futures contracts, so different than the spot volatility. And if you're not really paying attention to those future contracts and their signals out here, it could give a different message. But at this stage here, we'll just simply go with the spot volatility index. Now, do I anticipate that we are going to see the market not close off of its lows today? And the answer there is no. I would expect, it should be, it's a high probability that we will close at or near the high or the low of the session out here. So today's candle is pretty representative of what it is we see when selling basically ensues from the open. Now, this morning it didn't. It took about an hour before the selling came in out there. But that's just kind of typical of the candle formation that we're seeing today. So does Tom need to get out of the TVIX right now? No. But does he need to adjust his stops? Well, yes, because, hey, the markets can do anything they want. You and I, we're just playing the game of probabilities. And a one-day rate of change in the 38%, folks, it could be a bounce. It could be a bottom. It could just be a stall. But it doesn't mean jump on the short side of the trade. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 257. S&P is down 27. Question came in, is this all to do with North Korea? Here's what you and I know is that the answer is probably not. It didn't help things necessarily, but probably not. We knew about these. We've known about these market profiles for a long time. You go back and listen to the archive of every show last week, and I promise you, we took a look at these, and we said, in essence, the same thing that we said just during the first session out here, that this 2479 area was going to be very difficult for the S&P 500 to get into. Get above, close above out here. And we just simply have been trading inside this range for the last month out here. So it is a trader's paradise. And with it being a trader's paradise out here, that's why you've got to pay attention to some of the shorter term time frame charts out here. And the reason why it's really more of a trader's paradise right now, if I just simply take a look at the market breadth. This is using market breadth data to help assist us with regard to when there is what we'll call a bullish and a bearish crossover. This means when you have more issues trading above a box on in this case here a 60-minute time frame and more below the box. You'll see at 9 o'clock this morning, so just before the open, you'll see a red box and a green box. It says 9 a.m. 40%. We're in the red zone. That means 40% of issues were trading below the low of the market profile for the 60-minute time frame and 39% above. And you can see the market didn't sell off right then and there, but it was telling you market breadth, even while the markets were trying to, make move higher up until about 10 o'clock. You never saw the actual market breadth get back and confirm that move. Now, that's on the 60-minute time frame. We can look at 4 different time frames out here. You'll see on the 240-minute time frame that we saw that negative crossover really between the 8 and, because it's a 4-hour chart, sometime between 8 and 10. I can't give you the exact time out here. But you can see that has also had that negative bearish market breadth crossover. Daily time frame has not. So when you take a look at the daily time frame, you take a look at that one day rate of change thus far in the spot volatility index out here. Tom, just be careful, or anybody that's trading those vehicles, and pay attention to what's also going on the intraday charts for the ES Mini out there. I would use that as a great tool. And if you and I just switch over and take a look at the ES Mini, we'll look at the 30-minute time frame to begin. You'll see that as we speak right now, we've got a 1 to 1.272 A to B equals CD to the downside, and you do have the possibility within the next 9 minutes of a hammer candle forming. Could be a hammer, could be a bullish engulfing, could be neither of those. Could just be a little doji in Stevie's window out here. And 9 minutes or so, we can go back and take a look at it. But if in fact it did form a hammer candle, and you had follow through on the next session, what it would tell you is that price is going to go and bounce up to the 2460 area, about 9 points higher than where we're at. Is that the message we have at 1:21 p.m.? No, it is not. But you want to pay attention to that. Does it mean because it bounced up to 2461 that we're not going to go finish at the low of the day? No, it does not. But what it does tell us is if you get above 2461, that's the number as we speak right this moment, well, then that would say, well, we're probably not going to finish at the session lows. So here's the A to B equals CD to the downside. Again, that was inside the 30-minute time frame chart. I've got a 60 over here. Yeah, let's take a look at the 1 hour chart. 1 hour chart, you're going to see the same hammer candle as formed, but this candle doesn't complete until you and I are off the air with each other at about we get off about 4 minutes before, I think 3 or 4 minutes before the hour, so you'd have to wait until 2 o'clock dongs out there, so to speak. But this says, hey, a bounce at 2462 would not be out of the cards here. So this is what's going on the intraday time frame charts. And by the way, if we did get an A to B equals CD to the downside, the beauty of the 60-minute chart, what this shows us is this just simply shows us this would actually turn into be a Gartley buy pattern, or could turn into be a Gartley buy. Well, it would if we get a bullish reversal signal. It's just plain and simple. And as you know, every Gartley pattern has 5 different outcomes, but we'd always pay attention to Stevie's red line out there as our first line of demarcation. That was the 60-minute time frame for the ES Mini. So hopefully putting all that together is important, or assist you. Now, the other level that we want to be paying attention to watching on this set of charts here, this quadrant, is really the Russell 2000. The reason we want to take a look at the Russell 2000 is because a brand new profile formed today. Now, the structure of this profile, albeit bearish because the center of the box, closer to the top, what we want to be paying attention to is the bottom of the box there, 1390. Because if we see a close, or if you see a close below 1390, granted this is a weekly profile that is formed out here, still if you get below 1390, it says could be an A to B equals CD to the downside. Certainly could be would be an exploration of the most recent lows. By the way, that A to B equals CD pattern to the downside out here would look something like this from a weekly perspective, and it cannot be ruled out, and that is the 1316 level. But the first area to pay attention to is 1390.20, and that is in the TF, that is the weekly brand new bottom of its box that formed. It formed in essence Sunday evening out here in the markets. Okay, so what else are we going to pay attention to? What else are we going to pay attention to out there? And what you and I just looked at, as far as the markets, in my opinion, those are the most important things for us to focus on right now as we speak. You might ask the question, I don't know if somebody sent the email and asked it yet, is this it? Is this it? Is this the high? We're not going to see these highs again out here. And the answer for you is absolutely, positively, 100% no. We're going to see higher highs. It's going to be in the ensuing months. I can't give you the exact day and time. If I could, I would. I can't. But are we going to see higher highs again? And the answer there is absolutely. How can you be so sure, Steve-O? That would be an excellent question. Well, one of the reasons that I can be so sure about that is simply something you and I discussed at 9 o'clock in the morning, between 9 and 10 on Friday. And that was, now I did not know where the advanced decline line was going to end. That happens to be this little blue section out here. But it did, here's what's most important. It finished at a brand new all-time high. Is that how bear markets begin? That's just simply the question that I have to pose to you. Is that how bear markets begin? Have they ever begun like that? Is an even better question. And if you go resolve that question or answer that question, here's what you're going to find out. Absolutely, positively not. Now, I'm not going to be a prisoner of my past and say that it can't happen, because it most certainly can. But what you and I have to do is sit back and utilize probabilities out here. And the probability is that we are going to see higher highs. We're going to see 8,500 or so inside of the NASDAQ 100. It's just not going to be on September 5th or 6th or 7th out there. But it is going to unfold until it doesn't unfold. And as long as we are making it, there are a lot of people out there that are giving you all kinds of BS. Okay, it's all before Steve just shared with you important information, which is the market breadth stinks out here. That's crazy. It's absolutely crazy out here. How does market breadth stink when you get to a new all-time high last Friday? I don't care if it was a holiday or not. I don't care if it was light volume trading or not. Doesn't happen. Hey, at the New York Stock Exchange, you haven't even broken the trend line from back here on February the 11th. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks, now's off about 2:50 right now, and Sean writes in and says, Steve, Tom DeMark system, daily and weekly, what does copper look like? And Sean, the contract rolled over to December, and I haven't made that change inside of my Ninja Trader charts out there, so my apology for that. What I'm going to do here is show you the continuous contract, which will be fairly reflective, but it's not going to be accurate. So I'm going to give you what the continuous contract shows, and I'm going to ask you to resend an email to me tomorrow. If I were to go ahead and bring that symbol in right now during the show, all holy heck could break loose out here, and we don't want that to take place. But if we were going to base our decisions on a continuous contract, it would appear that this week might generate a TD sequential 13 count. That would be the blue number 13. The week has not closed yet, so I don't know the answer to that. But it looks like, as we speak right now, that would be the count. Now, does that mean that that's it? It's over for the move higher and the rally in high-grade copper? The answer is no. The great thing about many systems out here, and Tom DeMark's system specifically, and he developed the system for, who did he develop it for? Shoot. Come on. Paul Tudor Jones. And when Tom brought this system to Paul, the one thing that Paul noticed was when the TD signals failed, they failed miserably, which was also a great thing out there. I mean, not just that we learn from failure, but it gives you, in essence, both sides of the trade. And so when they fail, it just tells you about the huge momentum that is inside the market. Last time on a continuous contract basis, Sean, this is the daily chart we're looking at where there was a TD sequential count, was back here July 17. Now, you'll notice that price never closed below Stevie's red line. Yeah, we saw about 4 days worth of it, August 10th up until about August 15th out here. But I'm referring to after any kind of significant Tom DeMark counts out there. And you'll see that continuous contract-wise, the Stevie's red line's at $3.10 out here. Now let's switch over. So this just says, yeah, there's a potential count, but you'd have to at least get below Stevie's red line on a daily basis for there to be any kind of significant issue out here. And Danny, we'll look at some other significant resistance areas when we go take a look at the market profiles, where we can look at the December contract out here. But Sean asked about the weekly as well. And when we take a look at the weekly, now it's kind of interesting out here. This could end up being a TD setup, 9 count. Last week was number 8. This week could be number 9 out here on a weekly basis. Things really wouldn't get interesting to the downside until you saw a close below 295 out here. So that's what the Tom DeMark counts are showing to both you and I. Again, send me an email tomorrow so that we can look at the December contract, because I'm pretty certain it doesn't look exactly like this. It never does. But that's the best data that I've got. Now, I can provide you with some really good data, though, and that's with regard to what's going on a 60-minute time frame. Let's change that. 60-240 daily and weekly profile out here. And on the 60 to 240, prices below support. It's just as simple as that. It's below the bottom of the boxes that had formed out here. And the price is trading right back into the top of the daily box. We'll let this populate here. And you'll see that is priced at 312. And right now you are trading at 312. No big surprise here. So, Sean, what I would say to you, because it's a daily chart, is that if if high-grade copper can get back into the range, meaning below the top of that box out here, below 312, you could be looking at a move down to about $3.04 out there. Now, the daily box that formed yesterday, formed on Thursday. I take that back. Formed on Thursday out here. Does have a bullish structure. So there should be some pretty good support at the 304. There was a question, do we look at, is 317 significant resistance? Hey, right now, on the daily chart out here, Danny, This is great support, 312, or even 304. So 304 to 312 is great support out here. I don't see resistance in looking at these charts. Is there something, is this a previous high out here, something that you're looking at, the A to B equals CD pattern, something along those lines? If that's it, let's go take a look at it. Again, looking at high-grade copper. I wonder if on the continuous it's going to be probably easier, sort of easier. You see, on the daily chart, it's kind of hard to, for me, even me, being the aficionado of the A to B equals CD patterns out there. There's so many A to B equals CD patterns. I'm not sure really which one to provide to you. Instead, what I would do is just come over to the weekly chart. The weekly chart, to me, it's a little bit more clear. Although I don't have the A to B equals CD tool on there. So we're going to go ahead and fix that here in a heartbeat. There we go. So we put it in here. And this, in essence, is what I would be looking at for an A to B equals CD. This, quite frankly, says 337, 360 would be the range that price would be headed to. You know, you had a nice wide-ranging bar take out the B point on a weekly base. That was the week of July 24th. So at this stage here, that's what it looks like we're looking at inside of the chart for high-grade copper. So hope that helps everybody out there, but Danny specifically and Sean. And again, Sean, go ahead, please, right back in tomorrow so I don't forget to look at that for you. I don't see any other questions. You can send me an email, steve@tfnn.com. Just inside that heading, please put radio show question, and we'll go ahead and get and take a look at what you want to look at out here. Let's take a look at the Japanese yen. Absolutely getting crushed here. In fact, taking out or trying to trade right back into a level of support. This little red horizontal line out here in the 108.83 level has in fact acted as support. We're trading slightly below that right now. Will this level hold? I don't know. What does it take for the yen to really start moving to the downside? I would say, and again, it's a daily chart we're looking at, I would be very much paying attention to the trading session from April 17th. And that low was 108.13. If you get below that low, then you've got a larger A to B equals CD pattern to the downside that has set up out here. I don't know if that's what's going to take place, but that is certainly something to be paying attention to. And if, in fact, that takes place out here, well, then what you're going to see is you probably will see just gold just keep busting it up to the upside out here, because that would then suggest a large A to B equals CD. It looks like this to the down. Whoops, looks like this to the downside out here. Give me a moment. Looks more like this, and with a regard to a price projection. And if you see that, come on, work for us. There we go. It would take into the 104, 101 type area for the A to B equals CD. So this 108.13 is really important to be paying attention to. We've got a caller on the line that we'll go to after we come back from this breakout here. You too can get in line. You can call in. You can send me an email, steve@tfnn.com. Right now, we've got the Dow. She's trading down a total of 241 points. S&P off 24. We'll go to John in Philly after this break, and we'll take a look at the SPYs. Steve Rhodes with TFNN.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD. Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi folks, this is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the Tigers and Tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Now, if we take a look at the NQ 30-minute chart out here, what you're going to see is that the completion of this 1 to 1.272 A to B equals CD to the downside. You've had two hammers over the last hour, and this next candle session doesn't complete until 2 p.m. So you've got another, 28 minutes? Is that, no, how about 18 minutes out there? And you've got a nice bullish engulfing candle. So what you and I know right now is where it is at that the front line of the bulls is inside the NQ. We didn't get that same pattern inside of the ES. We did on a 30-minute basis for the YM for the Dow out there. Two hammer candles. You're not having a bit that much follow through. But we know where they're lined up. So you want to watch the lows of today to assist you with regard to your intraday trading. Do not be surprised to see the bulls be able to take price up to the 59.37 level inside of the NQ out there. Now let's go out to Philadelphia and speak with John. John, thanks for calling. Thanks for holding. How are you doing today? How was your holiday weekend?
Steve, I'm doing fine. Holiday was very good.
Excellent.
And thank you for your very thorough step-by-step work. I love it. One subject not yet addressed by you just on the stock indices, be it the S&P, the Dow, the NASDAQ, is this question. If the S&P starts breaking support, and let's put big picture together, back on March 1st, the S&P rallied into high for the year at 2401. Pull back, and then into mid-May, right before the Trump firing. Who did Trump fire? Comey. Back, I think it was like May 16th, there was a high on that. S&P was 2405. And then we launched it late May or June, and when we came back into 4th of July, and then 2 weeks ago, the solar eclipse, we came down and got close to 2405, 2401, but held it, bounced up. So it's very clear, just looking at those swing points, 2400, 2405, 2410 on the S&P is, a key level. And as you rightly point out, until we break that, it's a range. Yes. My question is, if we start to break that, can you do your magic, go through all your numbers, and display what would be next targets lower in the event that 2400, 2410 S&P level starts to give way?
So I'll give you a couple of different areas for you to focus on because you trade the equity futures contracts as well. This is our chart for the ES Mini, the continuous contract, obviously, because I've taken this back into 1997. And we're taking a look at this is a monthly time frame that we're looking at, but the green lines that show up on the chart here are the weekly horizontal trading range levels. So the first area to be watching for inside the ES Mini on any breaks or what have you should be the 2367 area. Give or take a few shekels out there. But that's a real key level of support. And if that fails, as we know because we've been taught by Bud Rolfs out there, then you would anticipate price could pull back to the 2213 area. So that's what I would be watching in the weekly. I have the monthly time frame up here, folks, because I can squeeze more data into it. The reason I have the weekly horizontal trading range is because it is the weeklies that actually are providing us with the most succinct information with regard to support and resistance. So very comfortable to say that 2367-ish area is a place for you to pay attention to. Inside the S&P 500, we could utilize that same set of tools out here. We're going to have different numbers. And in this case here, we're looking at daily, weekly, and the monthly horizontal trading ranges. So on the weekly here, we're right now trading at the bottom of a weekly range, which is in the 2456. We're at 2452. Not a big deal out here. You talked about the 2400 series being broken, 2419. So my next number here, utilizing the weekly, I'll just go ahead and explode this out for people to take a look at, would really be 2381, John. So that would be the next level inside of the S&P 500. Should it break those lows that you were taking a look at, that I would be watching for, 2381, give or take a few bucks out there. If I put the monthly horizontal trading ranges out here, they get to 2324. So we'll call the range, if you break through 2381, then what you'd be looking for, as a next step-by-step basis would be this 2324 level out here. So does that help you with regard to, what I would be seeing both ES Mini-wise and the S&P 500 and then the reasons why?
Indeed, Steve. Yes, it is helpful, so thank you.
Yeah, no problem. So
could I also ask you, you oftentimes you have a technique whereby you pick out, and let's take decline scenarios, you pick out highs and then lows, and then lower highs, and then you do your fib expansions. Could you perform that exercise with the S&P cash or the ES futures on that daily chart and display it on TigerTV? I always find that so incredibly helpful.
Yeah, sure. My pleasure out here. The part of the issue, though, is that we're really been trading in this sideways consolidation range. But the expansion on a daily chart for the S&P 500, what I would be grabbing at this stage of the game, I'd probably just be looking at the last high to last low, which is nothing more than August 21st to the September 1st high out here. And that expansion doesn't get us anywhere near the levels with regard to horizontal trading ranges that we were looking at. That's a daily. So daily basis gets you into the 2400, the 2378. Not that it can't do an expansion of a 2.0, but I don't have that part of the tool built onto my system. If we switch over and take a look at a weekly time frame and do the same thing, I'm going to end up, I think, with the same numbers, but let me just make sure here. And that expansion, because I'm going from August 20, the week that began August 21st, that's going to give me the same thing. When I would do it. If I take a look at the monthly, well, then that's a whole different game. and the reason is because for me, on a monthly basis, the swing point that you would use for an anchor point of an expansion would be the one all the way down from February in 2016. And then you'd use the high from last week. And then that gets into play 1624. But I just think there's too many other things that we have to focus on and pay attention to, before we even begin to talk about those levels out there. I don't think that the move lower So I've kind of been debating this in my mind out here. And, you mentioned, for example, some key dates out here, elections, Mueller coming in to investigate. And this chart here is kind of what I call my little geopolitical or events-oriented charts to take a look at bottoms that are formed out here. And the last two that we had with regard to bottoms that coincided with the events were the initial North Korea badass language. I probably got to put that in there where we just have North Korea, just so I can remember years from now. That's the old fire and fury language out there. And then we had a little Charlottesville explosion and low out here. What's kind of interesting, and I posted a chart inside the Tiger's Den earlier about military conflicts, because I know that this move lower out here is going to be blamed on the military conflict, and I don't know that that is the case out here. When we come back from this break, is there anything else I can do for you?
Steve, no, thanks so much. Do appreciate it.
Okay, I'll cover that in the last 2 minutes, folks. Just kind of give you my thoughts, or at least something for you to chew on. And, John, thanks so much for calling. Have a great day. Steve Rhodes with TFNN. We'll be right back.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollars-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned, because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So the 2-minute drill out here, the thing you're going to pay attention to most is going to be what that one-day rate of change is inside the volatility index. The worse it is, the larger the chance that you're going to see a bottom/bounce out here, certainly a stalling in prices. And if we have some of these A to B equals CD down patterns and or other things out here, don't be surprised to see a good bounce inside of the market. So if you're short now, that's great. Just adjust stops accordingly. And if you're not, don't jump on the train. And now it's too early to jump on the train out here. And especially we can say that if you see that spot volatility index above a 10% one-day rate of change. That's one thing to be paying attention to. To follow up on my conversation with John out there, bull market, bear market, where we at? We've got some conflicts out here, but if you just stay with the Dow diamonds at this stage here, because it's the best example we have of really a high that was formed out here back on August the 9th, August 8th, I take that, and we had a lower high out here on August the 16th. We did have a lower low out here on August the 21st, and Friday inside the Dow diamonds, or inside the Dow, was another lower high. We haven't seen these lower lows come in just yet, but any move below the August 22nd low out there, that would keep this in plain view sight. We don't have that pattern inside the Qs as an example. We made a new high out here, so that pattern is not in play as we speak, and it makes it just when you put that together, or when I put that together, when I think when you should put it together too, with what we're seeing inside of these TAS market profiles and how well support and resistance have held it, don't get out of your mind anything other than that is really what is going on here. And for those that are going to go ahead and blame the decline today on Korea, it didn't help things out here, but it's really this chart that I had posted earlier. Oh man, look, blabber Steve-O. We're not really going to get a time to get to it. Slideshow from this current slide here is this shows when the we'll do it tomorrow. Okay, I promise you we'll do it tomorrow. But I actually think the fire and fury language here, that may have been the bottom. No matter what Korea does. Chick Korea, I'm referring to. Folks, take care. Have a great day. We'll see you back on Wonderful Wednesday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.